Good evening to all. Great pleasure in inviting you all to the webinar on global trends in internal audit. A look ahead. We have a wide list of luminaries to glitter the session, and without losing much time, we will get into the program right away. Myself, K. Balaji, I'm the moderator for the day. And I have great pleasure in introducing C.A. Sabu Thomas, who's the chairman of Kottayam branch of SARC of ICAI. Mr. Sabu has had varied levels of success at his career. He started with the banking industry. He was with HDFC Bank. Then he moved to the Kerala Financial Corporation as a CFO. And then he had a very successful stint in setting up ESAF Small Bank, and he was the CFO of ESAF Bank. Subsequent to that, he has set up his own consulting work, and presently he has done a lot of work in the short stint as chairman of Kottayam branch. Without losing much time, I have a great pleasure in inviting C.A. Sabu Thomas. Over to you, Sabu Thomas.
A very good evening to all of you present here. Respected Nandaji, the chairman of the Internal Audit Standard Boards of ICAI, and CA Gyan Chandraji, vice chairman of this Internal Audit Standard Committee. Faculty on the day, CA Neeraj Bandarji, CA Mohit Danji, and CA Swapna Sun Gupta ji. So this topic for the day is very relevant to these times, because when I see this subject as a trainee during my articleship, this was purely based on a revenue-oriented internal auditing system. Then later on, it is changed to the process audit. Now it is totally changed to a risk-based audit. Now, a lot of changes are happening in the industry. Now, this COVID situation, a lot of challenges are there to run all the institutions. So, always there is a need for a good risk system or control system in every organization. So, this subject is very relevant for today, because earlier the issue was to run the factory. Later on, it depend on the employees or the organization. Now, tomorrow, what will happen to the institutions? That is the major challenges facing by every institution in all over the world. So, a lot of challenging situations are there. So, Kottayam branch is very proud to co-host this program, and I thanking Sri Nandaji to giving this opportunity. So, on behalf of the Kottayam branch, I welcoming all of you to this program. Over to the moderator. Thank you.
Thank you very much, Sabu, for the crisp and short speech on the subject. Now, we have amongst us the chairman of Internal Audit Standards Board, Sri Nandaji. Nandaji, namaste. Very good evening to you. And I have great pleasure in introducing, even though it is quite out of place to introduce a very senior person who's pretty well known, since the onerous task has been given to me. I am just getting into the motion. So I have great pleasure in introducing C.A. Charanjot Singh Nanda. He is presently the Internal Audit Standards Board chairman. He is the Central Council member, and he's the vice chairman of Banking, Financial and Insurance Committee. He was member of the Quality Review Board set up by the Institute. He was a member of the Central Council from 2004 and 2016. He was the chairman of Committee on Internal Audit. He was the chairman of Women's Empowerment Committee. He was vice chairman on Public Finance and Government Accounting. He was also the chairman of Professional Development Committee, chairman of Committee for Cooperatives and APO, vice chairman of Risk and Pension. He was the chairman of the Committee on Financial Markets and Investors Protection. He was member of the SEBI Advisory Committee on Primary Market as well as mutual funds. He represented ICAI on SEBI Committee on Disclosures and Accounting Standards. He was a convener of the expert group constituted by the Ministry of Corporate Affairs, Government of India on Investor Protection. He was member of the South Asian Federation Accountants Committee on Professional Accounts Committee in Business. He was the chairman of the Continuing Professional Education Public Relations Committee and Committee on Internal Audit and Internal Audit of the Institute. He was a member of the North India Regional Council for 2 terms from 1998-2001 to 2001 to 2004. He was the chairman of the Northern India Regional Council of the Institute 2002-3. He was the treasurer of Northern India Regional Council 1998, 99, 99, 2000.
Thanks a lot, Balaji sir, for such
so okay, I'm glad that you have taken a retirement on this rather than me being forced to stop, Nandaji. Thank you so much. So over to you, Nandaji.
Mr. Balaji, for your kind words. Thanks a lot to Mr. Sabu Thomas, my very old friend, who very generously accepted. I was in US and I gave a call to him. He said, sir, we're ready to host this program. I can see Mr. Neeraj Basur, I can see Mr. Mohit Dhand, I can see Mr. Sen Gupta, and all who have joined this. My best wishes to you. Ladies and gentlemen, the profession of internal audit is growing by leaps and bounds. In past 5 days, I was in Chicago to attend an international conference on internal audit. And the basic impetus was that as a sunrise industry, how internal audit could change the lives of not only our clients, stakeholders, but of the regulators in the government as well. We chartered accountants particularly have to put across our total metal and ensure that we render the quality services. Internal audit is essentially a management function. And therefore, whether you are reporting to the board or to the audit committee, the most important thing which you need to understand is how you can put across your thought process to create value. Creation of value is one of the very important ingredients where, as a professional, you add value to the processes, you ensure that frauds do not occur. Why do frauds occur? Because there is weakness in internal control system. Once the chartered accountant is through with each and every initiative, he will ensure that no lacking is done on the part of the management in understanding. The second thing is the risk appetite. We need to understand that the risk appetite is entirely of the management, but we have to ensure that risk is mitigated as and when it comes. Internal audit, our hard work, our indulgence, and our technical knowledge would pay a lot. I want to tell you that in times to come, most of your practice shall comprise of internal audit assignments. Not taking much of your time, we have very respected and revered speakers who have given their valuable time for contribution to this great board, the Internal Audit Standard Board. So over to the moderator, Mr. Balaji. I'm sitting outside because there was a program in Gurgaon. So I landed at New Delhi, and from there I drove down to Gurgaon to see that I attend that program. So my apologies that I'm not able, maybe the voice is also not clear, but I could not stop myself from addressing because internal audit family is my own family and I deem myself to be an integral part of it. Thanks for giving me time to speak. Over to Mr. Balaji for his further proceedings. Balaji, the dice is all yours.
Thank you so much, Nandaji. It was like watching the highlights. Now there is nothing much to left to host. You have covered all aspects of internal audit in your introductory remark itself. As you said, it is remarkable that internal audit has evolved from what Mr. Sabu said, CS Sabu sir said, to what it is today. So if I were to just bring it down in two sentences, one would be tempted to say that statutory audit makes one wise after the event, whereas an internal audit report makes the entity and management wise before the event, which is what we want. And now we have no better person to address this part, because basically we're talking about risk, and risk is something to be managed. And we have amongst us CA Neeraj Basur, who has been given the topic risk management. Neeraj Basur is a chartered accountant and company secretary with over 3 decades of industry experience, currently working with Trent Limited as their CFO, who also has the responsibility relating to legal complaints and secretarial functions. Before he took his current role in Trent in 2022 June, he had the role of CFO with Blue Star. Prior to that, he was the CFO of Max Bupa and Senior Vice President with Max India, where he was responsible for investor relationship, mergers and acquisitions, fundraising, risk management, financial planning, etc. Before that, he was with HCL, Spice, Escort, and he has rich and diverse experience in industries like manufacturing, telecom, software technology, life insurance, and health insurance. He has also undergone accelerated general management program at ISB Hyderabad in Gachibowli campus. Neeraj has a proven track record of creating, delivering, and enhancing stakeholder value as a trusted business partner. He has an acumen for financial management and effectively integrating financial governance, enterprise risk, strategy, and reporting to optimize the enterprise value. That's what we are here for, to optimize the value of the enterprise. He also possesses a rich experience of talent acquisition, people development, grooming, and consistent track record of building motivated and high-performing teams. Now, with great pleasure, I invite Sri Neeraj for this topic on risk management. Over to you, Sri Neeraj Pasu.
Good evening, and thank you very much, Mr. Balaji. And first and foremost, I would like to thank IASB for having me today for this esteemed panel discussion. Thank you very much, Nandaji. It's always a pleasure listening to you, be it your short, crisp thoughts. It's always very enlightening. And thank you to the Kottayam branch of ICAI for having me here. So I guess Mr. Nanda has set the context very nicely, and it is actually he's touched the core of this entire discussion that I also wanted to just touch upon. So he talked about value creation, and he talked about the entire risk alignment of risk with the internal audit, and that's so very true because internal audit is no longer a function which is supposed to, in hindsight, after the events have happened, tell us what went wrong or what could have been handled better, whether it is in terms of business processes or controls, or it is in relation to how value could be created. No longer. So the boards, the audit committees, the management, the leadership team actually now looks forward to internal audit to contribute to how business and strategic objectives can be achieved while ensuring that the standards around controls and governance are upheld to the highest order. So I have only one slide. I'm not carrying a huge presentation, just one slide. I thought I'll just walk everyone through that, and then I'll talk through most of my thoughts. So if I will just share that slide and then we'll take this forward. I'll request someone to kindly tell me when my slide is visible on the screen.
It is visible, Mr. Basu. You can carry on.
Thank you, sir. Thank you, sir. Right. So this is a nutshell. Even there is a requirement in the LODR for listed companies and in the Companies Act about vigil mechanism, setting up a vigil mechanism. Now, the way, I would tend to look at a vigil and a robust integrated vigil mechanism framework is that at the core of a vigil mechanism is enterprise risk management, complemented and supported by robust internal financial controls at the core. However, these deliverables need to be supported by internal audit, statutory audit, a very robust whistleblower mechanism, forensic data analytics, cybersecurity, a good compliance system, and then finally the integrated reporting, which is now also becoming more and more required for any good corporate to talk about. So what does this mean? What this means is that unless we have a good amount of integration in the work of internal audit and enterprise risk management, in a two-way flow where the information, insights, and knowledge flows back and forth freely, we will end up having sort of a silo, which in our current environment and the current world is something which is not desirable and something that is certainly going to not help create value. The way I would invite all our professional colleagues to reflect on this one single slide is that there are the various elements of governance which sort of feed into the entire core of vigil mechanism, and the two very critical components, one is internal audit and the other one is internal financial controls. When they are calibrated, when they are integrated well with enterprise risk management, it really starts to make a huge impact on the business performance, strategy delivery, and of course, the standards of governance and quality of control. So I thought I'll start with this slide to set the context of what I wanted to talk about. So what do I mean when I'm talking about integrating risk management and internal audit? So first and foremost, there is this two-way flow which I try to show on that slide. So first I'll talk about how internal audit can support enterprise risk management, or how the output from internal audit can act as a very robust input mechanism for the enterprise risk management. The COSO 2017 Enterprise Risk Management Framework talks about integrating risk management with strategy and performance. And in that context, the internal audit output relating to whether it is identification, evaluation, and assessment of risks, which could impact strategy and performance. That is a very, very useful and a very critical part of a deliverable of any internal audit function. So how can it, through the course of delivery of internal audit plans, how does an internal auditor help the management team with independent pair of eyes sharpen identification of all potential possible risks and have a view on those risks? Is one big area where risk management, or where internal audit can most certainly help risk management with the identification. Now, that's not the only area where internal audit sort of steps in and contributes. It also can, with the experience of the internal auditors, they can help the management team design a robust mitigation plan for each of the risks that is identified, and also through the course of their audits, help or sort of assess the effectiveness of the mitigation actions. Now, of course, the role or the responsibility to design a mitigation plan and implement it rests with the management team. So we should, we should also keep in mind, bear in mind that there's a need to segregate the roles here. We would not want the internal auditor to sort of own or sort of run with mitigation actions. That's not their job. But then certainly with their experience, with their skills, and with their expertise, they can help. They can help, do a very good mitigation plan design testing jointly with the management, or help the management, guide the management to identify what can mitigate the identified risk. So risk identification, risk assessment, risk evaluation is one area where internal auditors do have a role, can have a role to play. The second one is around mitigation design, mitigation planning, mitigation effectiveness testing. The third area where internal auditors can step in as part of this integrated approach is to help the management monitor the entire risk frameworks on a very overall basis as the third line of defense. Because while the management will own, the process owners will own the entire responsibility of implementing the risk mitigation designs, but then as an independent entity, as an independent value creator, internal auditors should step in and then help the management with monitoring of risk. So those are the three pillars as I look at it, where as part of that integrated vigil mechanism, internal auditors should and can interface with the risk management function and very effectively and in a very seamless manner. Now let me talk about a little bit about how the work of the risk managers, the enterprise risk management team, can feed into the work and the scope of an internal audit team. Now, this is the reverse flow of how the two functions can co-create and co-own part of this value creation. So the more, and again, we heard from Nandaji about risk-based audit. So risk-based audits are now a reality. It's no longer something where we may want to feel that, okay, fine, it's something good to have. The selection of the audit plans from the universe of auditable units is certainly driven, or should get driven, by the overall assessment of the inherent risks that sit in each auditable area. What do I mean with that? So, even if we look at, the risk management framework, and if we are following the COSO guidelines, now clearly the risk identification will follow strategy and the overall goals and objectives that the business has. Now, once if that has been done correctly, then clearly the risks that could impact business strategy delivery would feature high on any risk register, any entity's risk register. So it's quite a natural corollary to then suggest that the internal audit plan should ideally mirror and follow the identification of those risks. And within that, look at risks from an inherent level and not a residual level. Because what we want to ensure from internal audit team is to make sure that wherever inherently risks are, which are rated high, could be red, could be with high severity or high possibility of occurrence, those are the risks where we want internal audit team to step in and provide added assurance, because that's where the chances or the probability of maximum impact on performance could happen. And I'll share one example, a short case study kind of an example with you to illustrate this point in a short while. So kindly hold on to that. So risk-based audit selection, audit plan preparation, which are sort of guided by risk management, is indeed a very useful framework to have, rather than having a standard checklisted internal audit plan where by rotation, we pick up few areas every year and then keep rotating. That may add value, but then greater value is added when there is a good alignment of risk, the audit plans with risk registers and the risk output of risk management work, because that's where the strategic risks and the learnings from risk assessments can be used to either frame the audit plan or to sharpen the scope of audits as well. And that's how the leveraging of each of these two functions, capabilities and their skills can happen very effectively. What this integration between internal audit and risk management, what that also does, it promotes a very healthy creation of a very healthy risk culture in the organization, because we are living in an environment where while we keep reading, hearing about events and certain incidents where in hindsight we all believe that should have been done differently. A lot of it has to do with what kind of risk culture does an entity promote. Does an entity promote, encourage, discussion on issues around risks which people may be aware of, but are they speaking about it? Are they talking about it? Because all that will then eventually help make the entire audit planning more robust. So if we are creating an integrated structure, then the collaboration between the risk management and internal audit can be even better. And so-called white spaces where organizations may not have readily identifiable owners can be identified through the inputs of internal audit team. And those are the white spaces that end up becoming sort of blind spots, which over a period of time have a tendency to then blow up suddenly, and then we hear about, then that causes shocks and surprises, which is certainly avoidable. So the kind of collaboration which can happen between these two areas helps creation of a much larger risk portfolio, which is dynamic in nature. Because again, from a risk management, we don't want it to be a very static kind of a position where once we have identified, say 5, 6, 7 risks, and then we are just dealing with them. We don't want that. We want, because business will change, external environment is changing, internal environments will change, and so does the risks that are associated with that, and so does the internal audit plans and internal audit deliverables. So just to summarize this part before I talk about that example or that story of the case study that I mentioned. So while risk management is going to be predominantly responsible for developing the risk management framework, Internal audit will help audit the adequacy and effectiveness of the risk management framework. So that's how these two roles are are going to coexist. Risk management will be predominantly responsible for advising management and the board on the interpretation of the entire risks and the universe of risks that have been identified, whereas internal audit will continue to provide independent assurance of the risk management information that is submitted to the board. And that's the third line of defense that I talked about. So that's how it becomes more collaborative. Similarly, risk management will provide appropriate status and performance information to the board and the risk committee, board audit committee and the risk committee, whereas internal audit steps in to provide an independent view on the credibility and reliability of the risk management information that is submitted to the board, audit committee, or the risk committee. And that's sort of creating a natural balance in the checks and balance in the entire governance structure. Lastly, on this part, risk managers will act as an advisor to the management teams and a mentor to the management teams, the business leadership team, on the enterprise risk management, again with the objective of delivering the enterprise strategy. And an internal auditor acts as an independent reviewer to provide assurance on the entities or organization's capability and performance in the risk management. So as you can see, there are so many, such a healthy collaborative work that these two sets of such a set of professionals can actually do with the sole objective or the main objective of creating value and delivering value for the entity stakeholders across the board. Now, with that, I just want to now step into the example that I wanted to talk about, which sort of illustrates the collaborative approach that risk management and internal audit can have. So I'll go back to my experience and days when I was with a health insurance company a few years ago. And as you can imagine, health insurance by its very nature is a risk management business. So in that business, basically the company is taking on underwriting somebody else's health risk and accepting premium for that and paying out a claim as and when or if and when any health event happens. Now, there is in every across the globe and more so in India as well, health insurance business is impacted hugely by fraud risk. Now, frauds can and do happen, whether it is in terms of mis-selling or sort of sales that may have issues around who the policy was sold to, also around claims, because it is very difficult for any health insurance company to actually validate and verify each and every claim that is lodged. And the claims potential frauds relating to claims is one area which can be quite a bit of a catastrophic issue or a disaster for any insurance company for that matter, because when you're making a product, you're not really factoring in abnormal claims which could be which could land on the plate. So the story goes as follows. So we had a situation where we used to sort of look out for trends and data for claims across. So we used to do it regionally. We used to look at each and every state where how the claims information is flowing, because when you look at demographics, what you would assume as a risk manager, you would assume that if there are, let's say, male population of an age group of 50 to 60, 60 to 70, then the health occurrence or the incidents where they will need hospitalization should be more or less uniform demographically. So when we looked at this claims data, we found that there were a couple of states where the claims were trending abnormally. Now we got our internal audit team to go deeper into that area and do a thorough audit of what are we missing? Is it something wrong with the product pricing? Is something wrong with the underwriting? Whether the underwriters have sort of overlooked or not considered the health parameters sufficiently. So when our internal audit team came back, we found that there were the issue was not just around, of course, claims were high, but claims high. Of course, there was a fraud that was also going on with certain hospitals in those states. What we found that it went back to the sales, because there was a certain set of agents who were in sort of, you can say, collaboration or active partnership with certain hospitals, were lodging certain sales, which after a period of time, they were able to then lodge claims. So for the first few months, those agents would appear as very high performing agents because they were bringing a lot of sales and everyone was happy. But later on, it turned out to be just a makeover for putting in claims, which is what the problem was. So as an outcome of this work that the internal audit team did, we were able to redefine the entire fraud risk framework. Because then what we found that, look, it was not just about putting in more controls from a claims transaction point of view, that, okay, if a claim is being done, you got to validate the hospital, pre-authorization and so on. It is actually taking you back to the sales process and what kind of checks and balances and controls need to be, or mitigation actions need to be taken in terms of the selling process itself and validation of, even if it is KYC validation of certain agents. Now, the reason I shared this story is because, this kind of collaborative approach between internal audit and risk management teams enabled us to nail down the exact, firstly, it enabled us to exactly identify and sort of sharply define or describe what the risk was, because unless we did that, we would not have identified the correct mitigation plans. So since we were able to do that, identify exactly what was the root cause of the real issue, we were able to then go back to the drawing board on our risk registers and then rewrite some of the risks and then do a mitigation action. And the outcome there, eventually the outcome was, after this exercise was done, of course, we had a little bit of lower sales in some of those states, or we actually decided not to sell in certain cities at all. We decided to actually stop selling in some cities. We were able to actually make a huge impact on the business, because finally the management time and bandwidth was not getting sucked into running after errant hospitals or defaulting agents. It was focused on business development activities. So I thought I'll just share, this one, small instance or case study, just to illustrate how risk management and internal audit, when they get integrated and when they have a collaborative approach towards delivery of strategy and value creation, it can have a huge impact. And it needs, now what is needed? So I'll conclude with that. So what is needed? What is needed is a very open approach where internal auditors feel comfortable stepping out of the audit plan sort of approach that, look, this is my audit plan, so therefore I'm going to focus only on this. Of course, there's a need to focus on the audit plan. But then if we want the internal auditors to really contribute value, then we invite internal auditors to also consider visualizing themselves as part of management team, where they are equally they equally own the successful delivery of the strategy, but not directly, but as an independent pair of eyes. But they have a stake. They need to have a stake in the delivery of strategy and the strategic objectives. So stepping out of the internal audit plans, keeping an approach where, okay, fine, if and we can always go back to the audit committee and say, look, this is what we had said we'll do at the beginning of the year. Now business is dynamic, the business has changed, environment has changed. So we request you to consider giving us some approval for either adding an area or substituting an area where we believe this will be much better aligned to the realities. So in other words, yes, we start off with an audit plan at the beginning of the year signed off by the audit committee or the board, but have that confidence, comfort, and conviction that should there be a need to make any amends to that during the course of the year, we should be open and flexible to do that. Because the problem will be right here, right now. The problem is not going to wait for another year. By that time, it will be too late. And some So that's one part. The other part I want to say is, how can internal audit and risk managers co-create lead indicators and not lag indicators? Because most of the times, just like our body vitals, whether we look at our blood pressure, we look at our pulse rate, we know exactly what's going on, or at least doctors will know what is likely to go on inside our body. Risk managers and internal auditors do have the capability to sort of define and determine certain lead indicators of a problem which may be building up or is likely to build up. And if this lens is followed, then most certainly what is likely to happen is that the management teams can then do course corrections proactively and not really sort of wait for an event to happen and then discover, okay, now we need to make certain changes. The last part I would like to just touch upon is the use and adoption of technology. So how can internal audit switch over to a more digitalized approach of carrying out their work, where the bulk of the internal audit team's time ideally should be invested in drawing insights and less on collating data and working on that data. And now we have tools that are available. We have technology that's available. How do we get the internal auditors to rely more on technology and become equipped with the digital tools? And what that also does is, we're not just then focusing the work on sampling and just hoping that the sample is representative of the entire universe of transactions. If technology can be used for some concurrent reviews, then it can be on the entire data. Then there is no need for the internal auditors to look at by sample by exceptions, and it can be simply done on the entire database. So deployment of technology and extensive use of digitalized approach is the call of the hour, need of the hour, and I'm quite sure that I guess all of us as professional colleagues are quite mindful to this requirement as well. So I just close this discussion by just summarizing where we talked about the vigil mechanism, where in line with the governance requirements as laid out in the Companies Act or for listed companies in the LODR, it's very critical for all companies to have a very integrated approach to vigil mechanism and not have a siloed, isolated approach to having pockets of the entire vigil environment. To have an integrated approach. Within that integrated approach, how do we get internal audit and enterprise risk management to collaborate and complement and partner with one another, such that the work of the internal audit enables the risk manager to become more effective, impactful, and relevant. Equally, how do we get the work of the risk managers to feed into the audit universe audit plan, and how do we get the two partners to coexist and sort of add value to the organization? So that's all what I had. If there are any questions or any clarification which I can provide, I'll be very happy to do that, Balaji.
Yeah, thank you so much. Yeah, it was a very swiftly conducted session where you very beautifully captured the essence relating to controlling the risk and ensure that we have a constant mechanism which prevents any disaster from taking place, rather than having an experience to deal with the disaster. These days, every minute, every second is so very vital in big corporate. So this vigil mechanism that you touched upon has a lot of relevance. Yes, and do we have a mechanism of taking questions after each session, or Shivani madam, Shivani ji, कैसे करने का है? अभी लेंगे questions ताकि बाद में last. So the brief shown was that we will have a question and answer session in a consolidated manner, or is it that we will have it right away? If anyone has any questions on this specifically, probably we can take it now.
Yeah, I'll request if you could do that, because I will need to drop off, Balaji.
Because
In the
I
next
also
person.
find that that's a better way of handling
Yeah.
rather than
Yeah.
in.
So if there's anything otherwise, even later on, I'll be happy to provide my thoughts if required.
So one quick question from my side. So you are saying that we can use technology. So this RPA thing will be very effective in controlling this at that level where they can afford that investment. Will you quickly touch upon that point? Robotic process automation.
Yes. So the beauty about the technology is that, look, depending on the appetite for investment by every entity, be it a small, medium, large, or mega business, there are various options available, right? Now the question is, are we taking the right call and the right decision to deploy that? So even a simplest of the, I mean, at a complex level, it can go up to RPAs and even machine learning, and it can take that kind of a form where we use very complex technology to help. But even at a very basic form, even if we are able to just download data and run it on certain data analytics tools, it can be done very simply in a very in a very cheap form as well. So it is the important thing is to embrace technology, and the important thing is to deploy technology and as a tool sooner rather than later, and then keep evolving. I mean, there is no real perfect solution or a perfect end. Let's say this is how technology should be eventually done. It will evolve, but the important thing is to get started. That's what I meant, really.
Yeah. Will you, for the benefit of the listeners, suggest any tool that comes to your mind which can be implemented or which is available, which you can name, can be searched upon and downloaded to be implemented at this level? Do you have any suggestion on that?
So as far as tools are concerned, the colleagues who are on SAP has quite a few inbuilt functionalities where it can give some ready to use depending on which area, whether it's FI or materials or which area we want to look at. There, firstly, SAP does, and every ERP does have quite a few inbuilt functionalities. There are certain other tools available which are sort of there are certain service providers who have made these tools where those tools can enable sort of a concurrent review on exceptions. I'm not taking any names in this forum, but there are those tools available where that tool can be deployed on the ERP or on the database, where concurrently it will sit and it will keep. So you define certain scenarios. So, for example, just I'll give one simple example. So if you want to see, okay, if there were instances of duplicate invoice payments by any supplier then this program will run in the background and keep checking the payables data and pull out exceptional data points, which can then somebody can manually check or go deeper and then validate whether there was. So, similarly, if let's say the company has a policy that invoices above, let's say, 5 lakh rupees or 1 lakh rupee will be authorized by certain level of people, and if there are instances where on the same day you see that for the same supplier, 2 invoices have been booked individually less than 1 lakh or 5 lakh, but in aggregate they're more than the predefined value. So this tool can keep searching for such outlier transactions, throw it out, and then somebody can do something about it. It may be a genuine business transaction, in which case it's fine. But then if it is not, then you start addressing a certain either a policy level or a transaction level failure, control failure possibility. So those tools are available, and I would say keep it simple. Use Excel if nothing else works. Excel itself is very powerful as an analytics tool. So if without making it too complex for anyone, simply deploy Excel in various forms, and it can be very helpful.
Hello.
Yes. I hope I was audible, Balaji.
Yeah, it was quite audible. Very wonderful. And thank you so much. In fact, you took a very committed time on explaining my simple query. Thank you so much for this elucidation on that part. So, if there are no other questions, can we move to the next session? Chairman ji, Sabuji, can we go to the next session? Because I think no other questions are coming from the floor.
Thank you.
Yeah, so I will just reserve the last few minutes to thank you for the wonderful effort. Neeraj, it was a session worth remembering for a very long time for the simple fact that you covered the sessions in a manner where it can be implemented in the organization, and also the last part where you mentioned about the tools, how effectively it can be done to create a system where it is internal audit, if I were to use that phrase, is more of a deterrent for preventing fraud, because statutory audit is a time when we would know that fraud has taken place, whereas this is like a policeman who's there in the street who will make you feel jittery about trying to commit a crime. So that is the kind of support internal audit does to the organization. Thank you so much for the wonderful session. Thank you. Sabu sir, you have a few words to say. So we can go to the
It's
next.
a wonderful session by. Hello.
Okay. So since there aren't much questions, so I take the liberty of going to the next session and get to the task of introducing CA Mohit Dand, who's very much present here. Good evening, Mohit.
Good evening, sir. How are you?
The benefit of the all good, all good. आप कैसे हैं, sir?
एकदम बढ़िया. Thank you.
ठीक है. So I take this opportunity to introduce CA Mohit Dand ji, and he will be covering the topic risks and opportunities for 2022. So he is a commerce graduate with DISA, in addition to being a fellow member of the Institute of Chartered Accountants with certification on IFRS, FinTech business model, and strategies from IIM Ahmedabad. He is a co-founder of Thinkitive Global Consulting Private Limited, which is into business consulting. He has been involved with Cash Intech Private Limited, and he is a risk and assurance expert. He was a risk and assurance expert with Agarwal Dhand Motwani, with an experience of offering a bouquet of fully integrated strategy, advisory, risk, and assurance. Mohit comes with an experience of over a decade. That's wonderful to know. He's a chartered accountant by profession. His expertise lies in management advisory, internal audit, and risk consulting, covering industries like healthcare, textile, garments, IT, and fintech. He has been advising mid-size and large corporates, listed and unlisted companies in India and abroad on matters relating to business structuring, deal advisory, risk, and assurance. He is a regular speaker with the IASB of Institute and other branches of Institute on internal audit and risk and other related topics of audit and assurance. He is a contributor to ebook published by the Committee for Members in Practice of ICAI on Office Management Manual for Members in Practice. Probably the last part deserves a thumping applause for having spent so much time on a very noble cause which would benefit the members across the country in a big way. Thank you so much, Moji, for that wonderful contribution to the manual that you've done, and we keenly look forward to your session on risks and opportunities for 2022. So over to you, Moji.
Thank you, Balaji sir, for your kind introduction. I would like to appreciate IASB, for having me here on this session. Also, I would like to thank Sabu sir from the Kottayam branch for organizing this session and having me here for this session. So I'll just share my screen and then we'll start the session. Can you please confirm you can see my screen? Okay, perfect. I think Nanda Saab and
we can very clearly see.
Okay, thank you. I think Nanda Saab and Neeraj ji has very rightly set up the context about the internal auditor, the global trend that is happening, the role of the internal auditor that is changing, the risk that we need to look at, and other respective areas. So with this, I'll just get into like what exactly internal auditor, if we generally say that there is a value addition that internal auditor has to do, but what exactly we are looking at, what exactly we need to do to add value to the business, right? So we need to understand that what is the current situation of the business, what is expected out of the internal auditor, and what exactly we should do, that we are doing the assurance as well as also we are covering the advisory part. Just a minute, sorry. Just allow me. Sorry for this. So yeah. So basically, we'll talk. So basically, with this context, we'll talk about what exactly we are looking at from the internal auditor's point of view. So, and covering the risk, seeing what exactly the risk means, what is the opportunity, and what is the role of internal auditor in this era. So generally, risk is often thought as a very inherent negative, from the very negative aspect. And every risk has equal opportunities, right? But at the same time, we have little doubt that why risk have the negative impact of the risk predominates. So in the recent years, in last couple of years, we have seen that there is a disruption in the supply chain, there is a shortage in the manpower, due to this pandemic, there's a logistics has failed, the climate has changed. So because of lot of risk or threats that is happening in the business, we see that the negative aspect of the risk is predominant. But at the same time, we have been listening or understanding from our childhood that where there is a risk, there is a reward. So it still continues, and it is the fundamentals of the business that if there is a risk, there is an opportunity. So opportunity, generally shadows the risk. For example, if we say that ESG is one of the risks, so environmental, social governance. So there are a lot of companies, or some segment of the companies. Initially, it was top 100 listed entities from the market cap point of view. They had to report impact of ESG. Now then it was 500, then it was 1,000. So what happens if this is a risk? If you don't report on the ESG matters, there is a risk on financial, regulatory, and reputational damage. So there is a risk, but what is the opportunity that once you follow this ESG model, your company is at next level, right? You are addressing the global issues. You are more you have a competitive advantage than your competitor. Also, if in the pharma sector, you must have recently read that top 300 medicines needs a QR code. So it is mandatory to have QR code in top 300 medicines. So this is the latest update by Department of Pharmaceuticals, and there is an amendment in the drug rules 1945. So if we don't follow, then there is a risk that there can be penalties and there can be repercussions of that. But if you see from the opportunity point of view, that if you have a QR code in every medicine, you can track the spurious drugs. So you can track where the medicines are, what is the life cycle left, what is the expiry, are there any spurious drugs which has been introduced in the market and sold in your name, right? So basically, with each risk, we see an opportunity. And what is the role of internal auditor here? So as internal auditor also is misunderstood, I would say, and has a suffering of unfavorable prediction, perception of often, seen as a policing body. So internal auditor is generally, was seen as a policing body, but now, the main role was basically that what went wrong. But now we as an internal auditor see that what is a progressive nature of the risk, what is the risk that can happen in next 2 to 3 years, what is a roadmap to mitigate those risks, and how we can best use the opportunity that the companies have. So so the risk has comes with the opportunity, and the internal auditor basically is the best person, because what happens is the internal auditor is the best guy to understand the complete ecosystem of any business. So if you go to if you go to CFO, if you go to a head of procurement, they will have a finance knowledge, other will have a procurement knowledge. But if you talk to the CAE, or or a head internal auditor or an internal auditor team, you will realize that he has knowledge of the complete organization. So you understand the processes, maybe I would say better than department head of any department. So that is, with that knowledge, with that grip of any organization that internal auditor has. So once he comes to an advisory role, I think, and he has all the facts, the internal auditor is in a very good stage to advise the company. So what should be the next, what we should have if we say that, okay, there are changes, in order has to change, what exactly we need to change as an internal auditor so that we can be called as next generation internal auditor. So that's why I say that, how should next generation internal auditor look like, right? So first is mindset. So what, as an auditor, we need to change our mindset from the compliance, or from the regular transactions, from the vouching, or from the double PO, PI, three-way checking and all. See, that is our core. That is assurance we have to give to the organization. But we need to move out of the auditor's mind. We need to get into the shoes of the businessman and think that, okay, what is happening in the globe, what is happening in India. So let's say if you're talking about the pharmaceutical company or any healthcare, what is happening globally? Is generic becoming more relevant? So whether branded generic will sustain, or it will move to the generic, or what risks are there, right? How businesses are growing in the globe, how it's happening in India, and how your client is behaving in that ecosystem. So it's very important to change the mindset, to adopt and then change yourself with the requirement of the business. We can't run our internal audit practice with the mindset that we have been doing in last decade, right? And then innovate the way of doing auditing. Innovation, I think Neeraj very nicely said that, innovation does not mean that you need to find a tool and you need to get a new technology to do the auditing. No, you need to innovate in a way that you need to upgrade your Excel skills. You can have an SQL software, or small software, or Excel skills, where you can innovate the way of doing, automate the templates, just dump the data so that your exceptional reports are coming in, and you're focusing more and more on the value addition part. So first of all, we need to change the mindset. Second, of course, we need to upgrade the capabilities. We need to understand the emerging technology. We need to keep updated what is happening globally, what is happening in India. If we don't understand the cyber security, how we are going to audit the cybersecurity system of the client, right? So we need to develop the capabilities, and of course the approach. We need to we need to work as a business partner. We need to work as an advisor and move from the observer shoes. Now, if we say that we need to add value to the business, how exactly we are going to add value? So what should be the approach if you want to deliver an audit with a value? So these are the few approach that we also follow, while doing an auditing is, first of all, focus on the prioritized area. See which areas we need to prioritize. First, where we can add more and more value to the client. Second is a focus on the area which has a greater risk, so that client does not have a risk failure and we can mitigate. So these are the two fundamentals where we need to focus. Is the prioritization of the focus areas, is basically where more and more value addition can be done. And second is basically where focus on the areas of the greater risk. Second is a reduce the short audit cycle. Earlier what we used to do is we used to make a yearly plan and just follow the yearly plan on the quarterly basis, irrespective of whether there is more a requirement of putting in efforts in one area because we have to complete the other area. We are pushing, the time spent. But now as an IT company, what happens is that software has moved to agile approach, right? So they have a sprints of 2 weeks. They just make a one wireframe, work on 1 week or 2 week sprints, go back to the client and say, hey, see, this is what we have done. You have any feedback, let us know. So they don't have to scrap the complete system going forward if it is not as per the expectation or the requirement. Same way, the audit is also changing and it's becoming more and more flexible and agile, which means that your audit cycle should be very small. You should audit in 10 days, 15 days, go back to the it should be more frequent, shorter, and go back to the stakeholder and tell, see, this is the our feedback, and what is their response, and then accordingly plan your rest of the audit. Increase audit quality, not only from the so quality covers a lot of aspects. We talk about the area of what we need to take for auditing. We talk about skill sets. It's about doing the quality audit on the ground. Also, the reporting that we are going to do is very important to the board, management, and audit committee. So we need to increase audit quality in terms of audit as well as the audit report. Most important is more and more interaction between the audit teams, auditee, which improves the management of, so basically you interact more and more. If you follow an agile approach, you go back again and again and communicate with the stakeholders, you communicate with the department heads, you communicate with the team to understand what exactly is happening on the ground. What is their expectation? Are we at the same level? So, these are the few areas to where these are the few approaches. I think if we follow, we understand what is the expectation of the management. Are we on the right track? Are we tracking the right risk? And this approach will definitely deliver audit to the value to the audit. Sorry. Now, just to summarize this part where, what has evolved, we say that there's an evaluation of internal auditor role from observer to strategist to advisor and to facilitator. And I'm a firm believer of this because, as I mentioned, that I feel as an internal auditor, I know more than the CXOs of the organization, because I know the strategy. As internal auditor, I know what is happening on the ground, what is the status, what are the risks, and what, complete picture is in your hand. So the role of internal auditor from, let's say, compliance, accounting, finance, IT, audit has moved towards M&A, raising capital, organization growth initiatives, strategic planning, enterprise risk management, and all those stuff. And I think this is why we say that, and I agree with Nandaji, that this is a sunrising industry. If you see that, the lot of companies are looking for a right candidate of internal audit who have this mindset, basically to look the organization or the risk framework from the holistic point of view. Now, we will quickly go through that. What are the kinds of risks that we see in last year and the current year? Sure, so every year or in every couple of years, the risks keep on changing. And this risk might be applicable to some companies, might not be applicable to some companies, but these are the general industry risks covering all the industries. Specific business, we need to see that whether this risk is applicable or not. So what are the top risks? One is cybersecurity and data privacy. I think this most of us have faced personally or in the organization, that this is one of the biggest risks that prevails from last couple of years. Increasing regulatory burden. So government of India and all other countries becoming more and more stricter, becoming more and more local. They want a very strong control governance in the system. So there's a frequent update in the regulation, and the companies needs to follow that. ESG, environmental, social, and governance, basically for the listed now top 1,000 entities. As per the SEBI, they need to report the impact on ESG. Third party risk, most critical and important. This risk we'll discuss in detail. I'm just giving an overview of these risks. Third party risk, management and beyond. Basically, the more and more, if you see, the services are outsourced to third party, then third party outsourced to fourth party, fifth party, sixth party. So this trail and the base is very big. So we need to control third party and beyond the third party. We need to see that even third party has further outsourced to any other parties. Business continuity, crisis management after the cybersecurity in terms of IT, in terms of your infrastructure, manufacturing, with the change of climate. It's very important to see that is our business sustainable? Will we be able to continue the business if there is any crisis? Merger and acquisition, this is a new risk, which we will discuss in detail. Basically, that new risk in the way that after pandemic, we have seen that a lot of large corporates have started acquiring the small corporates or small companies, doing a vertical integration, horizontal integration, getting into a new businesses. So a lot of merger and acquisition happening. So as an internal auditor, we need to see that are this acquisition in the right track, whether all the process, due diligence, with a synergy match, culture match, and all those things. Business sustainability, again, for the startups and PE, is our business sustainable? Is the business that you are auditing sustainable? If you feel that it is not sustainable, the business model approach is not right, I think we are the right people to go back to the management and the committee and tell them that, see, this is what we look at, how we look at your business model, and we think this is, this can be changed. Because a lot of startups have started feeling the heat of their business model. As we read daily that this startup, they have laid off 2,000 people, 3,000 people. We have stopped investing in them. This is why this is happening. You must have also read that one of the biggest startup, they have not filed their audit reports, and auditors are not ready to sign. So why this has happened? And being an internal auditor, I think we can much earlier than this all disruption, we can get into the shoes with the promoters and correct those business models. Human capital, one of the biggest challenge that any industry today has in terms of attrition, in terms of skill set shortage, mismatch of skill set, mental health, and all those things. Then automation, business disruption, digital transformation. Due to this, there are a lot of risks that is there in the organizations. And of course, we all are facing climate change and geopolitical risk. So these are few core risks we see in the last year and the current year. These are the risks that as all the industries have, and we need to see that how to have a right set of framework for our clients or the company you are working in, and see how it can be mitigated. So we'll discuss about few risks in detail, and just I'll try to basically emphasize that if there is a risk, what is the risk, what will be the warning signs we can think of, what IA can do, and what should be our next step. So if we talk about cyber security and data privacy, so one of the as I mentioned, the hottest topic for any organization, and the most vulnerable part in the risk register is cyber security and data privacy. As the technology is emerging, the risk is also emerging, right? And mainly what is the risk? Risk is in the cybersecurity is cloud, privacy, and talent. If I bifurcate the risk of cybersecurity, it will be cloud, privacy, and talent. So cloud complexity further increases if the companies outsource the cloud services, introducing multiple dependencies on third parties, right? So we don't know who has what right, and what integrations and all. And with that, there is a breach, there is a gap, and there's a breach. So IA internal auditor needs to leverage cyber cloud skills to address this modern day risk. As we all know that IT environment is really complex. For any organization, a large corporate, if you see their IT systems, there are a lot and numbers of systems integrated with each other, have outsourced to the third party. A lot of people have access to the system. There are a lot of security that needs to be taken care. So we need to upgrade and understand that what can go wrong and how we can help the client to to design the assurance, so that there is assurance by design at the end of the day from the cyber security and data privacy point of view. So if we talk about what risks are there in cybersecurity, there can be logons with the ex-employees. This we see, I'm talking about the general risk that we see, that logins are still with the ex-employees or people who have left. They have unauthorized access. There's a cyber breach, theft of your strategic plans, information, financial frauds that happens through the breach of this, your email access and all. Business disruption, definitely. If you see business disruption, reputation damage, if you see a lot of hotels or your flight booking sites, the data has been breached, and the data of the customer from the right from the date of birth, credit card details have been breached. There can be a failure of critical infrastructure, and because of that there can be a hindrance in the operations. So how we see, what are the warning signals to this as an internal auditor? So cyber silence, if we say that there is a complete silence, if any organization say no, we don't have any issues with our IT, we have a full tight security on the cyber side, we have full security, there's no breach, I think it's very next to impossible to breach. Yes, there can be few companies, very exceptional one, but today if your cyber the IT team say we don't have any breach in last 2 years and 3 years, I think you need to further investigate and see that. I think there is a lack of detection capability rather than that they have a full holistic cybersecurity system. Cloud control, so if they don't have a proper standard cloud control catalog, you can go and ask them, okay, what is your cloud control system or policy or SOP? What is a catalog? Who has the access? What rights and all? If they don't have that documented as a SOP, then I think there's a problem, and this is also a warning sign. If there is undefined domains, like lack of defined roles between your third party, between the IT system you have, between the department, internal departments, then it can be a warning sign. So these are all sign or a hint that you get, okay, there is some problem at core in the cybersecurity and data policy. So if you must have recently seen that on 30th June, there was a breach on the SEBI email system, right? So, and also I was reading a recent article where almost 670K, like 670,000 cyber attacks have already been done from in this year up to June. So these are the number of frauds or risk from the risk point of view we are talking about. So this is a huge, I would say, area and which we need to continuously update ourselves and continuously keep on reviewing the client system from risk and from the risk point of view. If we see merger and acquisition as a next risk, why we say that this risk has always been there in the system, but now post pandemic, merger and acquisition and consolidation is clear and stronger signal. Companies and even the capital funds have accumulated the plenty of funds that they want to spend and invest in any in company. Now, from an internal auditor point of view, what is our role, right? Our role is to understand what is the synergy while doing an acquisition. Pre, post, and everything in between is a part of internal auditor. So as an internal auditor, we understand the current organization. We see that, okay, what is the synergy with the next organization? What is what is the valuation? What is the integration problem we will have? So from a holistic point of view, not only from the business but from the culture, you would see that almost 2/3 of the acquisitions and merger fails. That's not only because there is no financial synergy, it is because of the cultural difference. And I was doing one due diligence for one of the companies in UAE, where a very good company for acquisition, very right price, but we reported that the culture of these two organizations are not same. What used to happen is, one was a very domestic kind of company where each and everything was minutely taken care of for the client that we were doing, and the other company had a very corporate style. So that culture was not gelling up, and the moment you try to change the culture, I think then it happens gradually. And our client did not buy that because he understood that the culture is also one of the very core area to look at when you are looking at merger and acquisition. So as an internal auditor, I think we can help a lot to the organization to see that, what is for us in that deal, whether it makes, it has a synergy, how the business integration can be done, what the IT integration can be, how the IT integration can be done, and all those things, and so what risk we see as a merger and acquisition is basically you can see a rosy assessment of a potential synergies, which might not be the actual synergy, right? There can be gap in due diligence. We have seen a lot of acquisitions or merger discussions, where there was a legal issue, or they could not cover the right, issues that was there in the prospective company. A structuring of the deal, reps and warranties, even the agreements that the client is signing for acquiring this, for the acquisition, that is also very important. We as internal auditor can also help the organization to get into this the complete structuring and see that there should not be a future repercussions or liabilities we are taking on, right? We should buy an asset and not and we should understand which liability we are taking with us. So what happens, is basically in this era, how we can see that what are the warning signs. One is the shrinking of synergy model. Okay, we thought of this, but that is not happening, right? So we need to go and see that, okay, what is left for us, whether we really have that opportunity. If we don't, can we have an exit plan? Can we go and counsel the people who are working in this after acquisition or during acquisition? If we feel that there is a risk in this acquisition, we can go and we can counsel the management, tell them that this is not a right target that you should have. If we have already acquired, we can again go back and tell them, okay, see, this is not working right, or this is working right. What is the exit that we can have, right? So all these things, I think, is very important as an internal auditor to get involved. And why the client will listen to an internal auditor is, yes, we have to go with a conviction, we have to go with the knowledge. And that's why this era internal auditor need not only have an internal audit knowledge, but also the complete industry, the complete ecosystem, the risk we need to understand. Then only we will be able to go and present to the board or audit committee that this is a risk. So going to the next risk, human capital. I think this is the biggest risk even we as a company or any firm or any organization is facing today. Let it be attrition, let it be the gap in the skill set, it can be a mental, I would say the trainings that is required, and also all this leads to a risk of human capital. So human capital risk management is all about understanding the potential issues that could arise from the poor managed workforce and creating a way to mitigate those risks, right? So we need to understand, okay, what will happen if we have not properly managed the manpower? Okay, so definitely company have to manage, but what can go wrong if the manpower is not rightly managed? What are the risks and what are the mitigation plans that company has? So we all know if proper management of human capital will only result in achievement of strategic and operational goals. Without the human capital, no company can basically get the results in terms of operations or in terms of strategic. So it is very important to have a control and right risk framework and mitigation plan for the human capital. So, earlier the risk assessment was very limited to just looking at a employee turnover. So what is the turnover and what is the package? But now we have to move ahead from just looking at those numbers, that what is the attrition rate and what is the industry and what is our attrition rate. We have to move ahead and understand that, what are the commitments or morale of the employees? Whether there is a dissatisfaction among the employees. We need to conduct, as an internal auditor, we need to conduct the surveys or request client to conduct the surveys and understand what exactly the people are looking for. Are they happy with what is happening in the organization, or they are looking for change? So all these things, we can incorporate in our risk framework. So the risk here can be a dissatisfaction, workplace disaster, careless hiring or retention. So we have We have seen that people who are not performing as per their KRAs, KPIs, but they're still in the system or in the organization, right? They will slow down the speed, they will slow down the complete ecosystem. So we need to see that whether there is a transparent system of monitoring the human capital, whether there's equality, whether all the compliances are being taken care. So what are the warning signs? As if you go in any organization and if you see these warning signs, or few more like this warning signs, you need to think of, like a redundant resignation. So what are the reasons of resignation? Okay, like if you talk about pharma company, I think the attrition is in the range of 30 to 35% or 25 to 35% on an average. That's okay. But what are the reason of having attrition? Okay, industry have that average attrition, but it can be maybe due to the financial issues you need to see, or it can be a cultural issues, or maybe due to the abusive culture or a pressure. As an internal auditor, we need to analyze those risks and go back to the management and inform that, okay, these are the reasons and these are the mitigation, these are the risk and these are the mitigation plans. How you can improve this? You can improve more and more. You have more and more training sessions. You can have more and more one-on-one meetings with your employees. You can have a better structuring model. These all things we can advise to the client once we know what exactly is the root cause. So if you go to the next risk, that is compliance and regulatory risk. Okay. So generally companies are challenged now to comply with the laws and regulations, while also there is an increase in the shareholder, the expectation from the shareholders and also from the other, people in the ecosystem. The compliance and regulation risk is increasing day by day. So these challenges are, mainly these risk is, I would say, in all the industry, but mainly into industries like financial services, banks, fintechs, healthcare, life sciences companies. So these companies are more regulated because large people are involved in fintech law or financial services law. A lot of money is involved. If we talk about healthcare sector, I think last 1 year or 2 years, you must be seeing that there are a lot of things coming up. So there will be a DPCO, drug price control order, where they will have a capping on the price. Again, we are expecting, there's a recent article which says that, news article which says that on maybe on in 14th August or 15th August, we can have some announcement of reduction or control, price control of few drugs. We see that recently there has been a trial regulations that have come in, which are very, I would say, not very easy to comply. Then there are UCMP orders or code that we are expecting. Recently, there was 194R that has come in, and that has impacted the pharma industry. So there are a lot of things happening, in that sector. So we, as an internal auditor, what we can do, we can be watchful, we can anticipate, or we can be updated to understand what will happen and what will be the impact of the same to our client. And because all this will have impact in the business. And so if we are not able to forecast, if we are not watchful of what is coming next, and if we are not able to inform the client, then there's a problem, there's a gap from the expectations. Because what the management expect is, you come and, okay, this has happened, then what is the current process in the organization, and what can be done to improvise the system, so that we are compliant also, business is not disrupted, and also we are not spending too much money. So we, as an internal auditor, this is our role to go back to the committee or a management. So I'm just trying to cover, like, these are some critical risks. What are the risks? How, as an internal auditor, we should look at these risks and should have a proactive approach to look at the risk, map that risk with our organization that you are working with, or your clients, and go back to the committee and suggest, advise that what they should do to mitigate those risks. We discussed about third party risk, third party and beyond. So as I mentioned that, we are outsourcing, companies often, outsource more processes than they retain. So today, all the non-core business activities are outsourced. Even from the manufacturing point of view, you see the large corporates, they outsource, especially in pharma. I've seen that a lot of, drugs are being outsourced for the manufacturing to the third party. So, to go to the third party and understand that are they following the same quality standards? Are they, following the same, bomb that you wanted? Maybe your raw material, there's a deviation in the raw material, right? And subsequently, your brand name is getting hampered due to this. If you talk about IT, we already discussed that you have outsourced your IT or cloud services, then that your third party has further outsourced to the nth party, next party. So what we need to do, we need to get the list of all, basically the parties that we have outsourced, and then we need to review the contracts. We need to understand what are the risks, their reliability, performance of the vendors, and all those things. So, and also as an internal auditor, we can be proactive and also get involved in the vendor selection. We can say, okay, if you have, from the business point of view, if you have analyzed and finalized any vendor, let us set up a process where before signing the contract, let it pass through a chief internal auditor or an internal audit department to understand whether, we can catch those risks or we can amend those agreements so that, the data breach is not there. There is no failure from the third party, and or the, compensation is being accordingly incorporated into the contract. So these are the risks and how IA can help the organization. I'll just take one more risk, in the interest of time. So basically, business sustainability. I think this is one of the risks which I have been, my interest has been in this topic, where when I see these startups, also we also work and work with the startups, but the core we see is that, is your business sustainable? I think that fundamental was missing in last, I would say, 4 or 5 years, where irrespective of whether you are making profit, whether you will make profit at end of the cycle, and you were getting the investments, you were getting more and more money, people and all. But today, again, I think the fundamentals are back, where they say, okay, do you have a sustainable business? If you don't have a sustainable business, I think then you are not a long run business. Someone in the cycle will get affected. The companies who have already listed, right? Then these companies, ultimately the retail investor has got the hit of that. The companies who could not be listed, there the investment of PE firms, venture capitals have got affected. So ultimately, as an internal auditor, it's very important to see that the client or organization we are working in, is this business model sustainable, right? So risk can be that business is not sustainable. You can see from the there's a decrease in the investment that we have been observing from last couple of months, that there has been a decrease in the investments from the capital, there has been decline in the valuations, there has been loss to the investors. So what are the warning signs? That there has been layoff, though the organization will say, okay, we are restructuring, we are doing this, but ultimately we need to see that why there are layoffs, why there is a delay in the commitments, in the payments, in the defaults, delay in the reportings, recently you must have, it's official news, so we can talk about it. Byju's has been called by the authorities that why your 2021 financials has not been submitted. Being an internal auditor, or being an, if these kind of, I don't exactly know the report or facts inside the organization, I'm just taking an example, but if we are an internal auditor, we can go ahead for our client and assess all these risks that is going to happen, right? You must have read the news articles that Farm Easy plans 200 million fundraising at a lower valuation. So basically, the valuation is dipping. Why? Because I think it has been overvalued earlier, or maybe the market situation is not right. So these are the fundamentals where we can. These are the fundamentals of the business, okay, and which we, as an internal auditor, I think we can assess and alarm the board and also the committee. So with this, I will conclude my session. Over to you, sir.
Thank you, Moji. So it was everything related to the risk and rewards, opportunities, and as you said, no risk, no reward. So you took us through the entire tour relating to how to go about it. It was very well done, and I'm tempted to refer to the Bodyline series where Sir Brandman was brought down to the knees by the vicious Bodyline attack, but still Stan McCabe stood ground and scored a wonderful 100. And Bradman said, "Egged everyone to come to the viewers gallery and see that." And he said, "Genius at work." And that's what I'm tempted to use as a reference for the wonderful session that we had from your questions coming. And there is a question. I will just refer to the question from one Mr. Sanjay Ramprasad. He has put across the question: how do we quantify the risk as high, medium, and low in risk register based on likelihood and impact? I will just reread the question for your benefit, Mohoji. His question is: how do we quantify the risk as high, medium, and low in risk register based on likelihood and impact of a particular event?
Yes. So in the risk register, yeah. So in the risk register, we need to understand. See, the likelihood of the risk. You need to understand from the or each and every organization can have a different likelihood. For example, if I talk about cybersecurity, right, or if I talk about data privacy, if I talk about you know, product having issues, quality issues, or like drugs, right, or like some medicine, someone is, if you manufacture or if that has some issue, it can, someone is consuming, there can be an impact or on the life of someone. So the likelihood of this for any organization who has the life-saving drugs or these kind of drugs will be higher. So each and every organization will have a different likelihood. Also, the impact will depend on, okay, the risk is higher, but what are the mitigation things that company has done, like cyber security? So let's say the likelihood, I would say, is if you have that legend, low, medium, low, low, medium, high, I think all the companies likelihood is 5 out of, from the range from 0 to 5, it is on the higher side, considering 5 on the higher side. So everyone will have high, but what are the mitigation, how you rate your mitigation, that how overall risk framework is covering that risk, and accordingly you will assess that what is going to be the impact. Okay, then again, depending on the industry, depending on the client, this will change, and that's how you will come to what exactly the risk. And so generally we frame we classify from 0 to 5, so we identify that it is likely, less likely, depending on the organization. And one thing is important is that you have to involve the first you have to use your experience of the industry. Second, you have to involve the people of the organization. You can't in isolation create this register and give the markings. You need to understand, deliberate, discuss that, okay, has the batch failures happened earlier? If that has happened, that yes, there is a likelihood. If not, then why it has not happened, if it has happened in the industry. Because let's say you have a good QA QC, you have good factory management, so yes, the likelihood is less. So I would just to conclude, I will say that it all depends on organization to organization. You need to have a very clear legends that how you want to do it. It will depend on the likelihood, the mitigation techniques, that is, or the mitigation process that is already there, and then you come to the impact and involve and communicate more with the people involved in those activities. Sir, hope this has clarified.
Yeah, absolutely. You've thrown absolute light on the question posed by the member. That was nice. I couldn't find any other questions coming from the floor. So I once again thank you from the depths of my heart for the way you've been able to capture something very complex, very relevant, and it was very noteworthy to bring out to the attention of everyone that the major risks that you mentioned were relevant for 2022 itself. So that is to say that you're keeping up with the times and then making us look beyond to see that the risk that could come up in the future is also taken care of now. As our honorable past president of India, Sri Abdul Kalam said, you have to do what you have to do tomorrow now. So you were able to capture the essence of that message from our beloved president, Sri Abdul Kalam as well. So thank you very much, Mohji, and we will now move on. We'll move on to the next session. I thank you so much. Wonderfully done. Unless you have anything else to say, we will move on to the next session, Mohji.
No, thank you. Thank you for having a patient hearing. Thank you.
All right. So we now move to the third session. Third session is relating to changing the role of internal audit, and we have amongst us Sri Supriya Sen Gupta ji. He has served in the Damodar Valley Corporation for long 33 years, and he was responsible as DGM and head of internal audit there. He introduced risk-based internal audit in that particular organization, which is a major power producer in Eastern India under the Ministry of Power. During his tenure, he was awarded the company was awarded the best company for excellence, which is wonderful to know, Sri Sen Gupta ji. He's a BCom from St. Xavier's College, Calcutta, having come out in flying colors with an honors and a post-graduation of MCom from University of Calcutta. He's a qualified DISA from ICA as well. Beyond all this, he has completed a certification courses on forensic and fraud detection, concurrent audit of banks. He's presently working at MC Bandari and Company Chartered Accountant. He has a keen interest in development of internal audit activities, and he has organized quite a few seminars and lectures. So we have an expert in the field of internal audit who will guide us as to what is the changing scenario that's taking place in the internal audit stream and how we should get acclimatized for the same. So I have great pleasure in inviting Sri Supriya Sen Gupta for the session. Over to you, sir. Sen Gupta ji, the floor is all yours.
Yes. Sir, am I visible, sir?
Yeah, very much. Yes.
Good evening, sir. Good evening to all the speakers and the organizers. I am very much grateful to ICI for giving me an opportunity to share my thoughts on the topics. And I also want to offer my thanks to Mr. Kottayam branch for organizing this very pertinent and very important event in this evening. So I am starting and sharing the screen. Sir, my today's topics is changing role of internal auditor. As all of us are aware that this change has not taken place suddenly. It is a shift from old role to new role, and it took decades of time. Now what at the present we are facing, we will discuss, but I am coming chronologically and I am trying to give a bird's eye view of the changes Uh, it is in the past it is a mere audit of mere financial records, and then it has shifted to the detection of identification of fraud and corruption. But today, IA internal audit enables governance, risk management, compliance, resource conservation, data verification, and analysis for the entire organization. So we have last two sessions, we have covered risk management in a very broad way, and we are very much now aware that risk management is one of the very evolving factor which should be taken care of by the internal audit also and by the management also. So I'm moving to the next slide. What are the factors which makes the changes in the role of internal auditor? IA practices have came a long way, but not without their fair share of challenges. In the face of emerging competition, spiraling cost structures, integrated global economics, newer technologies, business disruptions, and changing financial instruments, IA has often failed to keep pace. This has resulted in many organizations around the world, the IA audit, which was done internally, has been replaced by outside service provider and consultants. So it is one of the failure of the past internal auditors, where they cannot manage the internal audit function properly within the organization, and the organization has ultimately decided to replace the internal organizational auditors to service providers and consultants. Now, most of the companies, limited companies and other big companies have outsourcing of internal audit. They are not doing the internal audit of their own. Sure. So, sir, what are the factors for the failure in the past of the internal auditor? Why we are discussing about the changing in the role of internal auditor? In the past, some factors are responsible for the failure of the internal audit. So these are the main factors: of the lack of audit quality improvement programs, lack of management support to get involved in corporate strategic initiatives, considerable gap in skill sets required from industry knowledge to excellent communicators and critical thinkers. So industry knowledge is not sufficient for the success in internal audit. They must have excellent communication, and they should have critical thinking element also, sir. Often not aware of the best practices in the industry. That is one of the most weakness of the past of the internal auditor. In most of the organization, internal audit is done within the organization, and they are mainly isolated to their organization and not aware of the best practices in the industry. But in the new changing role, best practices in the industry is a must. You should know the best practice, and you infuse that in best practice to your industry or to your company to get the best result. Interdisciplinary initiative is mostly absent in internal audit department. So this is one of the another weakness. Previously, mostly finance people are recruited in the internal audit department, and it is assumed that the internal audit is a audit for the finance department only. They are not multidisciplinary, but after the changing scenario, I have also experience in my organization that along with the finance people, technical people, engineers, HR people, IT people are inducted to the internal audit department, and as a team, they are producing a very good results. So how to overcome the failure? The past failure we should overcome, because to keep the internal audit department flying in flying colors, IA now must be more concerned with identifying opportunities, threats, and requirements. So the internal audit department now should identify what are the opportunities, what are the threats, and what are the requirements to manage the threats and risk. Understanding the performance, risk, and compliance impact. Movement from manual detective controls to automatic controls. Actually, automatic control is preventive controls. Previously, it was a detective control which was prevalent in the internal audit department or internal audit practices. But now, preventive control is the key to the success of internal audit department. IA can help increase shareholder value through efforts to maximize, prioritize goals and activities and promote behavioral change. Improve processes, reduce cost, eliminate competition and redundancy. Enhance the organization recognition in the marketplace. So overcome the failure, we must accept the challenge. Our organization is expecting a lot of us from the internal audit. So we should accept the challenge and give the management the confidence, required confidence, that the internal audit department is quite efficient and also the solution provider to the company. So what are the things we have to keep in mind before accepting the challenge? That what are the opportunity of the organization and how the organization has to do that opportunity for getting the reward. Perform and earn. So the internal audit should guide the management to how to perform efficiently, not efficiently only, to add the value and earn the required revenue or required results, so that the role of internal audit is effective. Analyze the risk, threats, financial losses matrix. So if there is a risk, there is a threat also. So there should be analysis by the internal auditor that what are the risks and what are the threats and how the threats resulting losses to the company. So that has to be mitigated and that has to be managed. Compliance requirements and best practices. So compliance is nowadays a very big challenge to the company. Internal audit should support the management in compliance of the various statutory provisions of the industry, and what are the best practices to manage this compliance. You have to manage the compliance of your organization also, and also see the best practice of your industry also. What is the best practice? So this is the very key word or buzzword, what you can say, transform and perform. So if you transform yourself and perform better, then the role of internal audit is getting much more value to the organization, and the organization will have a confidence that the internal auditor in the changing scenario is very efficient and giving value to the organization. So first is learn how multiple role work together. So previously, we are auditor, as an internal auditor, we are doing the work of internal auditor and giving a report to the management on various topics, mainly on finance related matter. But now there is a multiple role, there is an acronym GRACIT. GRACIT means governance, risk management, internal audit, compliance management, ethics and culture, IT and security. So these are all the areas which should be taken care by the internal auditor while framing the internal audit program. And also the management should be aware that internal auditor is very much active in suggesting on all these matters, and the report is also giving some of the findings that in all these areas. Review, learn, align, perform. So you review the situation, learn from it, align your role and perform. May I give an example in my practical life? I was auditing in a public sector, in a power sector company, which is a very big power sector company having plant in so many locations. So what we find during our audit, that the raw materials is mainly coal. So coal is a big consumption in big plant. So sometimes it is coming through belt. So sometimes belt is not working. So what the department is doing, they are showing the consumption as opening stock plus purchases minus closing stock. The reason is belt is not working. So it is not acceptable to us, because if you have some at the time of purchase, if you have some wrong invoicing or wrong receipt, or at the closing weight you have any mistake, then the consumption is not correct. So we have asked that whether there is any alternative way to find out the weight of the consumption. So that they are not aware, department is not aware. But when we are exchanging some plan program with other organizations, we find that the new units which are coming now, new units having inbuilt gravimetric meter in the boiler, which measures the coal at the time of generation. So from that gravimetric meter reading, we can find the reading of coal. But no one can explain me how can they give. So we have also arranged some visit for the engineers also. So they have seen that there is a system in the what the equipment supplier has given in the manual, there is a system. So they have started the system, and in addition to the belt weight, they are having a gravimetric weight, and if belt is not working, gravimetric weight is working, then gravimetric weight will be taken, or every time belt and gravimetric weight is also compared now. So gravimetric weight is another second substitute of weighing the coal. So this is one of the technology which is exist in the organization but not known to the operating person. So audit has to be very much active, should be active in this connection, and they should give them the suggestion and implement the practice. So in that process, we have because the consumption on the basis of the consumption, the billing to the consumer is power billing to the consumer is raised. So if the consumption is not correct, billing is not correct. So once we have got this record, parallel record, that is belt weight and gravimetric weight, our consumption is getting corrected, and our billing is also getting corrected. So you can see there is a vast connection between use of technology, modern technology, and without using the modern technology, how a tremendous a loss was there. Now it has come into profit. So it is just a sharing. This is the same slide. Last slide it was review, learn, align, perform. It is just a cyclic order. So what are the road to perform? How to perform the new role by the internal auditor, changing role of internal auditor, how to perform the role. OCEG has defined a structure of principal performance, which speaks of risk, governance, and control, which is also a focus area for internal audit groups in accordance to Institute of Internal Auditors. So Institute of Internal Auditors also prescribe this risk, governance, and control to be the principal performance for internal auditor also to perform effectively and efficiently. Focus on new and emerging risk, long-term approach to risk-based internal audit. So this is the another road how to make the role changing role efficient. So now the internal audit is mostly risk-based, because risk-based internal audit focuses on auditing based on the objectives of the organization rather than testing internal controls. Previously, the internal controls are tested properly, and if the internal controls if they are satisfied, then audit report, they are issuing the audit report. But now risk-based internal audit is the order of the day. This approach allies internal auditors more closely with the organizations and management and provides much more value compared to traditional internal audit that only focuses on accounting and financial controls. Attributes to the new age internal auditor. What should be the attributes? So internal auditor should sharpen their focus and skills in risk management and compliance. So risk management is the keyword now for the internal auditor, as we have already witnessed the two sessions last time by Mr. Neeraj and Mr. Mohit. The risk is the now most important element. Risk management is the most important element, and we must manage the risk properly. Internal auditor must devise the audit plan, keeping in mind the risk management, and also the compliance role is also very important, right? More responsive and risk-based audit plan. So audit plan should be risk-based and more responsive. Responsive is that what the management is needed. Management is needed. Sometimes it is a very urgently they are asking the internal auditor to do some audit work, special audit work, or very important audit work for them, and that is a theme on based on single theme audit. So that internal auditor should be responsive and should prepare the plan clearly so that the audit report should reflect the proper observation. Acquire and train talent on continuous basis. So in the internal audit department, the chief internal auditors, CIO, CIA or the CFO, sometimes CFO is also heading the internal audit department, should continuously try to acquire some good qualified person to the internal audit department, and training program should be there for them to cater to the organization need and also to the industry need. Step up to the use of audit technology and tools to become more efficient and effective. So technology and tools is the latest helping hand to the internal auditor in the changing role. They should be aware of the new technology and what are the tools available, so that they can better project the report and also find in a very short time they can complete the audit and accurately they can do, because in the earlier years the sampling was only the tools available to the auditors for conducting the audit. Now sampling is done through the tools, and other technology is also there in the SAP, as discussed by Mr. Neeraj. The SAP also it is there. You can use that technology also, and very efficiently and very fast you can get your findings, because you audit report, it is very important that you should submit the audit report timely and efficient. In this connection, you can also we can also refer some of the latest audit tool also or technology also, that is a blockchain and IA. Blockchain and IA is also now used in internal audit, and it is giving a very good results. What are the expectations from the auditor on role change? What the industry expects, what the organization expects from the auditor on the role change of role. Strengthen itself in the areas of risk management and governance. So now the new age internal auditor should strengthen the department in the areas of risk and management and governance. Use of quantitative skills and knowledge of risk. So quantitative skill should be acquired by the internal auditor thoroughly, and the knowledge of risk, how the risk is affecting the company, what are the type of risks and how the risk can be mitigated, what are the risk profile of the company, higher risk to lower risk. You can higher, medium, lower, you can identify the risk. So the internal auditor should categorize the risk and also place the risk in the risk register, so that at the time of audit, the risk testing is not missing. Offer strategic and consultative advice to drive the business. So basically, internal auditor should know the business very well, and they should be the part of the management, and also should be a strategic insight. He should have a strategic insight and consultative advice he should give to the board or audit committee or the higher management, so that the business can be driven effectively. And also the internal audit department will be the helpful to the business internal auditor should participate the changing internal auditor role he should participate in value creation by overseeing finance transformation, mergers and acquisitions, post-mergers activity, strategic decisions, and operational enhancements, while enabling technology to affect these changes. So technology is the buzzword today, and internal auditor should be aware of the latest technology so that he can apply the technology to the department and for the benefit of the organization. And this merger acquisition, post-merger activity, strategic and operational enhancements can be enhanced by this use of this technology. To use his knowledge of enterprise risk to support strategic objectives. So he should be a knowledgeable person, the internal auditor, who is doing in his capacity, he should be knowledgeable. He should know the enterprise risk management to support strategic decisions and objectives. Internal audit will also need to bring discipline to risk management and initiate risk identification, apply quantitative and qualitative analysis. That is also very important for internal auditor, because risk management is one of the things that is very important. Risk management involves risk identification, and he should apply quantitative and qualitative analysis also. Expectation, there are a lot of expectations of the management or of the society from the internal auditor. That is to strengthen control design and effectiveness, undertake evaluation and continuous monitoring. So the control design is important thing which should be strengthened and should be effective, as undertaken for evaluation and continuous monitoring. Continuous monitoring is one of the very important thing for the changing role of internal auditor, because the things are moving very fast and the changes are also moving very fast. So if you do not continuously monitor the things in the organization, it may be that you will be not doing the current auditing job, but the past auditing job you are doing now. So the monitoring should be continuous, and at the same time evaluation should be done. Strengthening auditing techniques and enhance regulatory compliances by expanding its risk monitoring and auditing responsibilities can not only help business preserve value but also creation. So previously the auditing, internal auditing is aiming at preserving the value, but now the value preservation is not only sufficient, it should also create the value, at the same time preservation of value, at the same time creation of value. Now the technology, the new age tool for internal auditor. Technology is the buzzword, but this is the most important word at this time, because previously we are using the Microsoft Office suite, Excel or some other Microsoft Office for as a productivity software for internal audit purposes. But today the mainstream technology should be utilized, because it is not only adding the value, but it is saving your time, energy, and also very accurate result you are getting, so that the management is very much confident that the tools they are using the tools is also for the benefit of the organization. So what are the now the mainstream technology? What are the mainstream technology which are using now? We are using now, or what they are solving? They are giving us the benefit: automated work paper management, automated control testing, continuous risk monitoring, risk-based audit planning and scheduling. So work paper management is one of the most important for the auditors, because we are also having standard of internal audit where working paper management is also one of the standard, and it is a very important standard, because working paper or documents you are preserving or you are generating at the time of audit will serve the purpose in the future also. So in this technological advancements, work paper management is getting automated, and you are getting the copy or soft copy in your system, and you are using it afterwards, or you are using it at the time of your reporting. And when the things is getting messy or some problem is there, you can showing that you are having all the working paper management at your system also. Control testing, automated control testing is generally very popular. Or control testing your say duplicate voucher is there, so it is getting automated. You are getting the list of duplicate voucher, so within 5 minutes you are getting the results. But in previously, when you are using the Excel or any other audit tool, it takes some time. You have to collect the data, you have to put the data in the Excel sheet, then only you can analyze. But now it is getting within 5 minutes. In this way, your risk is also monitoring. You are also monitoring your risk continuously. You are monitoring your risk-based audit planning and scheduling. So planning also you can done, and what are the schedule, how the schedule is getting implemented, what are you advance the schedule, or are you behind the schedule? You can have that risk-based schedule automatically by the system. Knowledge management is also one of the area where you can get it by using the new age tool. Data mining and analytics, it is a very common use by all of the auditors. Analytics is very much used because when you are doing any report, any type of analytics, analysis or data mining is very easy if you use the tool. And this is also very important when you are generating MIS for your big company. It is just within half an hour you are generating the MIS report using data mining and analytics. So it is also acceptable to the management also, and also very beneficial to the internal auditor. They are very comfortable with these tools and generating data, generating the MIS report with this data mining and analytics tool. Graphical audit reporting, sometimes management is asking for report in graphically. So this tool also helps the graphical audit reporting. And issue tracking. Issue tracking is something very important for the auditor also. Some of the event they have to track. So sometimes a audit trail or something like that. So that is getting very easy with the use of this new age tool. Improved audit execution and documentation. Audit execution and documentation. Audit execution is they are doing by using the tool, and the documentation is also they are keeping in the system by using this tool. Now, path to transition from traditional to risk-based auditing, because risk-based auditing is the order of the day, and traditional to risk-based auditing, on the changing role of internal auditor, the most important is how to shift from traditional to risk-based auditing. So first, you have to build an appropriate audit universe, which is the most important thing when you are shifting from traditional to risk-based auditing. Audit universe is framed for all the audit activities, but all the audit activities are not equally risky. So you have to analyze which is very risky and which is less risky. So some high, medium, low, you have to categorize, and you have to do the process also, how you audit this risk category. You have to choose the process, and the audit should be rotational. That is, all universal audit you cannot do at a time. All the audit in the universe you cannot do at a time. So you rotate it regularly, and if the audit is high risky audit, then you keep it in the audit plan for every time. And also the medium risk also you keep what we are doing in our organization. All risk-based audit we are doing in 3 months. Medium based audit we are doing once in a year, and low audit we are doing in 2 years. So because there is a lot of activities in our organization, and it's a very big organization, so these are the way we are dividing the audit universe, and rotational we are putting in the rotational way. Systems, you should audit the system also properly, because the system should be taken care of. That you should know the system. What is the system? What system they are doing? What are the you should interact with the system people. Internal auditor should interact with the system people and should know what systems are risk based, mainly risk based, and less risk based. So the system should be also audited based on the risk. And lastly, risk based audit process should be introduced throughout the organization. So for example, in an organization we have some of the critical area. In a power sector we have a critical area. First is the generation of power. For generation of power, the raw materials are coal and oil. So coal is done in the fuel section. So fuel section audit is very risky audit. So you should include this in our regular audit program, fuel audit. Next is the transmission of power. That is also one of the very important areas. So in the transmission of power, also you keep it in the regular audit program. Next is the commercial billing. Billing also very important, because revenue is the only source. So you commercial area, you also keep it in a regular manner. So these are the three key area which should be done in a regular manner. Next, you support 5 or 6 areas, say finance, HR. These are these areas. Okay, you audit it in next 3 months or 4 or 6 months. You audit in this area. So these are the process from traditional to risk-based auditing. When you shift, you have to build an appropriate audit plan. What is the future of internal audit? Because internal audit is a very important area up to the management, and not only the management, also the there is a legislation also that internal audit should be done by some listed companies. So internal audit is considered is one of the very important and very important area to the management. So what is the future of the internal audit? So risk management becoming an intrinsic part of good governance. Throughout this evening, we are discussing about the risk management, different type of risk management, how management risk can be managed, can be mitigated, or can be categorized. So risk management should be the area which should be very much, internal auditor should be very much aware. And risk-based, if they want to introduce risk-based internal audit, they should study the risk very carefully. IA must step in and offer assurance in this regard. That is, management wants that internal audit should assure the management about this risk management, that yes, internal audit has covered the risk area, high risk area or medium risk area, and they should assure the management that this area is running as per the management's plan and there is no deviation from the management's plan. So by prioritizing issue, allocating resources more efficiently, focusing audit effort on areas that need it the most. So what we have discussed in the audit universe, audit planning, that in the audit planning, we have to prioritize the issues. That is mostly on based on risk. And our resource should also be limited. Everywhere our resource is very limited. So we should allocate the resource also very effectively and efficiently also, so that idle resources are not there, which we have witnessed in so many audit, that there are idle resources we are carrying, because the audit, when we are going for audit, proper audit is not taking proper care for giving the data. So just they have to wait there idle and that resource is being lost. So this should be taken care by the CFO or the head of the internal audit or the head of the team, so that the resources are not idle and they should be used efficiently. Focusing on audit effort on areas that need it the best. So that is also risk-based audit. The focusing, we should focus on the more risky area, and up to the need of the organization. What the organization needed, we should first verify the plan of the management or what the management expects from the internal audit, and we should focus the audit effort on these areas carefully. It emphasizes the need to evaluate risk exposure by soliciting inputs from the board and management. So when we are evaluating the risk, we should be in touch with the management or the board, so that the risk evaluation is proper and the management also accepts the risk evaluation, and we can go with that risk registers for further audit. It also focuses on auditing and improving risk management processes, testing the reliability, integrity, and effectiveness of operational information, safeguarding assets, and sustaining compliance with laws, rules, and contracts. So we should in the future we should confirm that the internal audit should focus on the risk management processes, testing and reliability, integrity, and effectiveness of the operational information. Safeguarding assets is also very important, and sustaining compliance with laws, rules, and contracts. Thank you. Thank you.
Thank you very much, Sen Gupta ji.
Thank you, sir.
So you effectively captured the metamorphosis that a chartered accountant has to go through in order to meet the requirements of the internal audit related challenges. So you very clearly gave us the challenges, how to assess the challenge, how to accept it, then how to transform so that we perform. Then you put a clear pointer as to the future where technology is going to rule the reins. It will have a definite role. The member who wants to be part of this has to be on top of the technology. Then the transition path was also very clearly explained by you. So you have given the attributes which is required to meet the challenges in the internal audit profession. And it was very wonderfully captured. I thank you for that. Let me check if we have any questions on that. There aren't any questions which have come. I can see. Is it audible? Can you hear me?
Yeah.
So I was just saying that we couldn't see any questions related to that, and I'll just take a minute. A member, Mr. Biju, has posted relating to the earlier query that we can actually give relating to the quantification of risks on register. He has said, member has said that there can be a structured way to assess the risk like 931, and it can be multiplied to identify and then find the overall risk which can be mitigated based on such finding. So beyond that, I didn't see any questions on that. If there are any questions, we'll wait for a couple of minutes, and otherwise we will move on to the next level. So to the viewers, to the delegates who have participated online, this is the time to post your questions. Sri Sen Gupta ji has given a very detailed analysis of the requirement of the role, the challenges, the changing role of internal auditor, where we stood in the beginning and what we are doing now. He also given a clear pointer to the future. So it's the right time to post any questions that you have to a very learned speaker we have amongst us in Sri Sen Gupta ji.
So can we have a
Sen Gupta ji, one viewer has posted a query whether you can give any experience or cases of application of technology on internal audit. If there is a small brief that you can share relating to that, will be good.
Sir, I have an experience.
Yes, please share that.
Use of
Thank you.
it is not in my audit process, but in my daily in my usual life, I have experienced one thing which technology helps me a lot, and which is also that can be also applied in audit also. That is,
Okay.
once I went to Bangalore to meet my son, and from the airport I usually take cab, Meru cab, which takes me to my hotel. Hotel is fixed hotel, so it charges some 850 rupees in the morning at 10 a.m. So I have taken that Meru cab from airport to that hotel, and that when we are just getting out from the airport, there is a checkpoint at the Bangalore airport. Guard is asking the driver that where you are going, and they are putting some entry in their register. There is a register, they are putting the entry that where they are going. And at that time I found the driver is not behaving properly with the person also, and during my journey also he is not behaving properly with me also. So when I reached the hotel, I asked him about the fare. He told me 1400. So I have asked why 1400? It is 800 I am paying regularly. Why 1400? So he told me that, sir, here this is the receipt. He has given me the receipt. So Meru cab, there is automated receipt also they are getting out of it. Okay. So that receipt I have taken. Yes, it is written 1400. So I have to pay him 1400. But once I entered the hotel, I checked the printout. It is on the same day printout, but it is time is given there 6 a.m. Some 6 a.m. and the location is also not my location. So that is a different slip. He has handed over to me and taken 1400. So immediately I have scanned that printout and raised a complaint to the Meru cab. So 3 to 4 days after 3 to 4 days, when I came back to Calcutta, I again give a mail that I have not been given any reply to that. What is the status of this query? I have got that documents with me, and I have got the scan with me also. So after 2 to 3 days, they have told that we are very sorry. It is a mistake, and we have already blacklisted the driver. So your 600 rupees is being, you give me the Google Pay, I will send it. So everything is technology. Google Pay is also technology. Everything is technology. But at that time, I don't have any Google Pay. I am not using Google Pay at that time. So I give them the bank account details. So it took 3 days to give me the bank account details. So, but they have credited it in my bank account after 3 days. So this complaint is redressed by way of using the technology only, sir. So I think this type of things also should be borne in mind while we are going for audit. Also, we are going for outside audit also, and also some electronic record we are generating throughout the audit. But you should keep the document intact in soft copy or in hard copy. Maybe in soft copy is better. So I have given the importance of documentation in the in my presentation. So documentation is very important in this digital age. Also, it is very important, because if you have in your system, then you can prove that yes, you have gone through that process and you have audited. So this is one of the example just of my here. And practically, sir, I am not using much more tools in my internal audit activity, because I am not practicing internal audit right now. But in my organization, they are having some, I am not quoting the name, some of the package which are available in the market, because these are big organizations, so they can afford. And they have also have a customized package for audit, and they are using it in the auditing of their activities.
Okay, so that was quite forthright and very informative, albeit from a personal experience. as you said, the appearances are very deceptive, and that is where the internal auditors is supposed to focus and not fall for the format or just the numbers. We have to go beyond and see the timestamp, which is also part of the technology, which can't be erased, like the messages which come in WhatsApp as well. So with that, I have just checked again. We don't have any more questions which has come from the viewers. So I now suggest that we go to the concluding session. And, from Kottayam branch, we have actually no words to thank the board for having given us the wonderful opportunity to be the host for this superb event, where the topic was very relevant and the speakers had been excellent right throughout. It is like the opening with Sachin Tendulkar and Sehwag, and then comes Kohli, and then it went on, and it has been kept at a very high level of quality and pace. So every good thing must come to an end, and now we have to get to the concluding session. I request our chairman, branch chairman, C.S. Sabu Thomas sir, to make the concluding remarks and also present the vote of thanks to the entire institute and especially the Internal Audit Standards Board for considering Kottayam. Over to you, Sabu sir.
Thank you, Balaji, for wonderfully coordinating the sessions. So, Sri Mohitji, CA Neerajji, CA Supriyaji, thank you very much for the excellent sessions you have taken during the last 2.5 hours. Even though all the audits are operating in a very restrictive manner, I think internal audit is the one area where we can express our own opinions. We can give more creativity to the management. We can create more value to the stakeholders. Because I think earlier times, every internal audit also, it was on a very restrictive areas, because many of the managements were not able to give license, or they were not interested to do the internal audit of the software, internal audit of the HR. So today, I think Mohitji has cleared or set on the areas like HR, how importantly it is taken care by the internal auditors, or on the software, like in the banking industry, I think more than 30 to 35 softwares are operating by the banking industry. But I don't know how many of the internal auditors are able to get into these softwares and the complexities of the operations, complexities of the product, complexities of the HR technologies, or complexities of the relationship with the business correspondence, like the international contracts. I think more than 100 or 150 products are operating by every banking industry. But the internal auditors, their ability to crack into the solutions, ability to give a better report to the management, because nowadays the management is ready to accept any type of internal audit, because that complexity is there in the operations of any type of organization, like banking or like manufacturing industry or any industry. The complexity of operations are there. So the management is very much interested to get the better reports. Earlier, some 20 or 25 years back, the internal audit is restricted to marketing or sales or excise or sale tax or production planning control, but nowhere it is touched to HR, nowhere it is touched to the risk-based audit. Now everything is open to the auditors. So the subject today we have taken is very relevant for the profession, very remunerative for the profession. It is very attractive in the current scenario. So on behalf of the Kottayam branch, we are very proud to host this program, and I thank the chairman of this internal audit committee of the ICI and my very good friend Sri Charan Josik Nandaji to giving an opportunity to Kottayam branch. Also, the Vice Chairman Gyan Chandraji and the faculty Neeraj Mansurji, Mohitji, and Supriya Senji for the wonderful sessions they have taken. Also, I would like to give our thanks to Arun Agarwalji and Ardi Bensalji and Shivaniji and all other staff members of the ISAB board. And also I thank the participants in large number for attending this 2.5 hour sessions on the internal audit, and also our branch staff, Kottayam branch staff, for the all cooperations they have made for this program. Thank you once again from our Kottayam branch team for this evening session. Thank you once again. Thank you, Balaji, for managing the show very exceptionally. Thank you.
Thank you, sir. Thank you. Good night, sir.
Thank you.